Hello, everyone. Mike Arnold here, co-founder, Pat Trading Partners, along with who's not here, Bob Iacchino. Hold on one second. How is everyone doing? Wow, isn't this volatility fun? Fun, fun, fun. I was being facetious. So, all right, pretty big reversal intraday. The 10-year pretty much a rip your face off move from my book. Wow, wow, wow. But VIX was dropping with the market. Very interesting. Shall you trade in interesting times? That's all I have to say. I would rather have it a little more peaceful. But we can't always get what we want. Sometimes I guess we just get what we need. Hey, Waka Waka. Waka Rip Market. What's tomorrow, Waka? Is there anything special going on tomorrow? Hello, Patrick. Snapped. Did and they're removing fourth quarter guidance. They're just fourth quarter out the window. Goodbye. Yeah, snapped is going down. I don't know about going long just yet. Not after that where you might get a tiny bounce. Again, I don't like trying to grab falling knives. Not going in if we markets get hit tomorrow. Yeah, Waka. There's Waka Waka. They rip every day. Good afternoon, Gary. All right, Waka Waka is more on the constant RIP, down, dead. The market's dead. Waiting for the daily close on the S&P minis below the 62.5 for the gap fill. Well, there you have a strategy in place. She just won't give it to us. So, how do you know what gender the market is? Maybe it's gender fluid. Did you ever think about that? Depending on the day? Huh? Bet you didn't. What's the market's pronouns? Come on, people. Get with the times. ESG investing. Go, go, go. So many large spoofing trades going on today. Really annoyed as it changes the market direction. There's still a fair amount of spoofing. George is still go along at the June low. I don't necessarily know if I want to be long again at the June low unless I get a killer signal. Same gender as your pick. Well, I don't know what gender your pickup is, Jacob. Sorry, I just don't know. I was a little too long today, sold into the close. All right, let's talk about stuff after we got started. By the way, since I haven't been doing this so much, please do consider subscribing. Definitely the people here, hit the like button. If you're new and you want to see what we do or when we go live, hit that belly thingy. And that's about it. But no Bob today. Bob's recording a podcast. So, well, let's just see. All right. Consumer Board leading index forecast -3 comes in -4. So the leading indicators continue to roll over. Revised up just a hair. That was a revision up, though, but the still leading down now. Oh, I saw some comments. I don't think we're in a recession yet. That's just a tie-in from this morning. By the way, the dog has had trouble last night and kept me up all night, has been sleeping all day. Unlike me. So, there we go. Let's see. What else do we have? We just had a lot of Fed speak. What do we have going on tomorrow? Is tomorrow OpX? Is it a big OpX? Is it October OpX? Other than options expiring, we don't have much. We have Williams speaking during the live stream. Now for the crude traders, you got the rig counts. And we have the monthly budget settlement, which isn't going to do crapola. Today, Tesla taking it down 6% after their earnings release and call yesterday. Mega caps were pretty flat, mixed, offsetting. Uh, so consumer defensive, somewhat taking it in the shorts. Oil holding up pretty decently. So pretty mixed day overall. Some minor strength in the chips. You can see the sector energy up a bit, but utilities with the 10-year, remember, utilities are very interest rate sensitive, and we saw the 10-year note tank and the yields go up. Remember, they trade inversely for anybody new here. Industrials down, financials down, cyclical down, defensive down. Pretty bloody day overall in terms of the sectors, though. FOMC, I forgot to refresh this, but I doubt that's changing at all. So we are still in negative gamma. What I'm more interested tomorrow is with where, this 3,700 is a major magnet for calls and puts. We got 3,650 and 3,600, which are more the put magnets. So we'll be taking them in terms of that also still negative gamma mode. Still that 75 basis points. Bouncing up closer to neutral, still in fear, but we're keeping a close eye on this out of the extreme fear bounce. We had Snap. I actually was so caught up with Snap and a Tesla argument that I didn't get a chance to look at CSX. I'm going to have to do that later, but Snap is crap. Friday, checking out American Express and Verizon. Remember, AT&T did beat. Overall, we'll start watching for more longer-term potential bottoming in the communication sector, but not quite yet. That's really all I'm checking out tomorrow. We'll probably glance at HCA Healthcare. Let's see where we sit. All right. So here's our little daily S. You know what? I'm not going to start there. Let's just start with these notes. To begin on a good note, or would this be a bad note? Breaking down. Next minor target 109.05. Don't know if we could get this 107. Very interesting. I had this potential little double. Remember, just because it's potential, watching it little rally up, then kaboom. Off. Remember, just because anything's a potential, don't do positions off of potentials. I have to keep reminding people that because they see any move that conforms their bias and they're like, oh, well, it's potential. I might as well go with it. No. So the notes, coming in on this key target tomorrow, and if you're looking for the yield skyrocket 4.239 through my 4.209. Next key area isn't until about 4.48. We don't even have a minor pausing area yet. So it's just a long-term perspective. The 10-2's yield curve, not that I'm paying attention to this silly little triangle more, I'm paying attention to this minus 35 basis point level again, area. But that's very key. I wanted to show some other chart. Here. Hold on one second. Guess that's not going to update. This is sort of interesting. Just for the people following. I'm not saying that it has to rhyme exactly, but I found this sort of an interesting chart back from 74. You had the end of Fed, so entered a recession. The Fed did not stop tightening till into the recession, and then you see the follow-through move, and then we get the bounce. Okay? So this is what I'm also pointing out. Whether this Fed, I think they will continue tightening when we are in a formal recession. I do not think we are there yet. I think we will be coming up sooner rather than later. But regardless of that, you know, once they stop tightening, you can still see a downward draft in the markets. And then this is the thing. The markets generally bottom before the end of the recession and recover. By the way, this looks like a nice double bottom on a closing basis pattern. So, do you have to call the absolute low? No, but you can get in for a nice move. So even if they stay in pause mode, you know, without pivoting, we could eventually get a bounce back play while they are still in pause mode while we're in a recession. Just wanted to, I thought that was a very interesting chart. All right. Hold on. Where is this? MJ, for anyone looking to learn price action, support resistance, trend lines, double bottoms, and tops, the 5:15 minute on the Dow yesterday evening into today is absolutely fascinating. There you go. Check that out on recommendation from MJ. Let's see. Can I explain the ghost wick on the SPY daily last Monday? Just ghost wick on the daily. What ghost wick? And sometimes you can get bad ticks. On the Monday the 17th, what's your ghost wick? The low here from the daily was 357.28. From your shorter term charts on the 17th, oh, this being the ghost wick, that's what you're referring to. It might be a bad tick that's not been corrected. I'd have to check out another platform. Oh, but they do have the low. There might just be a low misprint because of where it was off the closing basis. I don't know because it didn't trade there. So it might just be a thing on their charting platform that's off. I've seen that before on a lot of different charting platforms. I'd have to look into it deeper. Sometimes things just, well, you got to be careful with things. All right, let's get back to, let's do the snap. Here was the snap, which Waka Waka was covering as shorts going long. Don't know about that long play, but remember, just wanted to, because I got told I was absolutely insane when it closed below the 62.5 that we'd be back down between the 87.5 to 100, where we've been now for quite some time. And now we're down at $8. You know, I bet you we're gonna. I'm thinking we're gonna trade back down to 5. So, like, I guess there could be a little. I'd wait for some kind of gap play personally before I went long. I just wouldn't go blindly long into this price action, but that's me. I'd wait for a potential gap play, or at least a gap play to the breakdown zone, which would be around 950 before. I mean, that would be the before filling the gap. My gap play would actually be to major support, and this was major support. Now major resistance. Major resistance. You can see 1, 2, 3, 4, and kaput. There we go. Just trading down with that rotation zone, weekly rotation zone. It's also why I don't like calling longer term bottoms until we get the weekly rotation zone out of the way. That doesn't mean the weeklies have to cross. What it means is it has to get out of the way. I'd rather not be an aggressive bottom picker. So, where do we sit? S&P. So the key stop level was a close above 37.47.25 for this double top. Traded up there, but no close above there. Remember, that's why I said close above there, at least on a 1 hour, if not 4 hour. I'm watching all these on 4-hour. And that's why I have a trade through stop. What's a trade through stop? Well, let's say you're waiting for a close on this 62.5 and the market just skyrockets. That's a trade through stop. Meaning if it trades through 37.57.25, trade over. Don't have to wait for a close. So no close above 37.47 as I put out this morning. Trading back down, breaking this little key support, still in play. No, don't. I'm not lowering a stop yet on this. It needs 36.58.75. I'm actually going to bump this stop level up just a bit, 36.61. Why? Because I have the flat 1 hour 200 there and the 50% harmonic. Okay, and yes, that's the prior harmonic from this move. It's not the harmonic from this. Other people were looking for, which is completely valid, the close below the 62.5, 36.05. Right now, it could be interesting, though, with tomorrow, with the options, 3,700 being this close, unless we really start pushing below this 3660, which at least is stop reduction. Then we got the put gamma at 3650, and if we really tank down, it's 3600. Again, this is tactile. Until this pattern gets blown away, I got to stick with the short in the short term. What would be now your overhead resistance for overnight is right here, which was pretty major support, even testing back on Monday, and then validated on Wednesday, validated on Thursday, and then broke today, and then retested today. So 3683 area is key support. You can watch that in conjunction with the 1 hour rotation zone. Okay, so that's key. That's the first key. If it does get above it, I'm really watching 3,700. Why 3,700? Because of all the put and call options, gamma that sits there, and naturally how it's going to affect the delta. So that's what I'm keying off of. So, by the way, if you have a question for me, if you have a question, put question mark in front of it so I know it's not just back and forth conversation. Since we are getting more and more popular, I can't get to every comment, nor I'd be here all night. So I'm going to have to filter out the back and forth conversations and just focus on questions. Let me just get to a couple other things. I don't know. I did not get a chance to go back and re-watch the stream. I don't know what I said for the stop. If I put it wrong out, I'm sorry. On the 4 hour closing basis, it had to be above 11,300. If I had it listed with 11,272, which I think it did, that was incorrect, and that would have been a mistake on my part, because it's not a stop reduction yet. So the trade through was 11,344.25, 11,300. It triggered really nicely on the 4 hour. That's why, remember, I use the same stop for the close through as what I'm using for the trigger. So a trigger on a 1 hour would be a 1 hour close. A trigger on a 4 hour would be a 4 hour close, etc. If you were using the 1 hour, then it was a technical stop out, which can happen. So if somebody sees me do that in the future, could you let me know? Because until the stop reduction, you don't use the new lows. I may have messed that up this morning just because I'm doing so many things. And sometimes my head goes faster than my mouth goes faster than my brain. I don't know what I'm saying. So that's still key. 10,931, 10,851, 10,780. One that was in no doubt. By the way, we're not below this key support yet. So This is where I'm going to just look at these harmonics just from this retracement to see what lines up, and nothing fantastic. So I'm moving it back here, but my resistance is going to be about 11,150. First level of resistance. Support coming in 11,028. Then below there it is 10,931. Dow was from this other double, this little one in here was a stop out on a trade through basis. And now, yes, this is still technically another double, which can happen. This can be viewed as one side of it. It's very sloppy, though. This would not be the one I'd be trading. I'm just going to use these for the lower targets. That's why I'm keeping it on here. Another question that was asked of me, what do you do if there's like an S&P, NASDAQ, Dow, and Russell? Double or same trade triggered in all of them. Do I take all of them? No. My default is the S&P. Now, if we're in major outperformance mode by one of them, and if we're outperformance mode in something to the upside and I get a buy in all four, I'm going to take the one that's been generally outperforming. But why am I not going to take them all? Because there's too correlated. Just like if I get a pattern, let's just say in semiconductors. Let's say we get 5 or 6 buy patterns all on the same day. Am I loading up my portfolio all with semiconductors? No. I'm going to choose one or maybe two, depending. If the semiconductors are in a very bullish streak and we get buy patterns, I might go to 2. Will I go over? No. Why? Because things tend to cluster, and they also tend to cluster in wins and losses in sectors. So I don't want to sit and load up my whole portfolio in one sector worth of trades. Yes, it could outperform, but it could also way underperform. I like to choose, especially in bull markets, sectors that are in buy mode. I like to put in, not so correlated assets across different sectors that have strong patterns. It reduces the volatility of the portfolio and maintains decent returns. So, Russell, real quick, remember we did not have a pattern, nothing else, but for the people watching for the bearish play, 1700 is really close. Overhead resistance, 1719, not only from the 50% harmonic, but this breakdown zone, which was broken earlier today, so now that's key resistance. If it does trade above there tomorrow, I don't have the option stuff up right now, but just based off a harmonic and resistance area would be about 1735 to 1740. What was interesting is even with this sell-off this afternoon, or for the most part this afternoon, we got a little bounce at the very end. Little bounce here. But with the VIX going actually down into the close with OpX tomorrow. So that will be interesting. Volatility not going up in the option expiration tomorrow. Can I check the NASDAQ 30-minute potential double bottom? Or I don't look at the 30-minute normal, but we will. We'll look at the 30-minute chart. That would still be valid. I just want to make sure I'm using the correct peak. That's why I switched to the 15-minute. I'd also use the conservative targets, but we don't know if this low's in yet. That's why I'm using this other side. Yes, it would be valid. So it's valid on the 15, it's valid on the 30. On the 1 hour, it's still technically valid also. You do have the gap in there. Dollar index. This was a pretty significant reversal in the dollar index. Still holding. We had that one little close below the rotation zone, but still really holding the rotation zone. So still in bullish mode. And the only thing that tips my thing is 111.31. Crude, little rally up, and then a move back down. Still watching based off that close yesterday for a return to this lower area. What else do we have? I know we had some other questions. Can I ask you a question? On AA was down in after hours earnings, but today the company was up instead. And do you earnings was good? Do I think earnings was good for Alcoa? I mean, it was a miss, but this. I did not look at their guidance or anything else. So I can't comment specifically on their earnings. However, just based off the price action today and where it is, I would be watching for a potential bottoming pattern in this area. See, I hate the sloppiness of this when it was done on one day, but it was low first and then high. So this is where you got to be careful. Because if you look low first and then high, so it's where it helps to do multi-time frames. This is technically a double, needed to get below 35.44. Oh, is that 35.45? So it was only pre-market. Never mind, it's not technically a double because I don't use pre-market price. Let me just double check here. This is where, again, we might have had a slightly different print. And I confirm it on my trading platform too, but this is not a double. If this had gone a penny lower, I got to stick with the rules. This would have confirmed a double, and then this would have confirmed a double but not triggered. It does not, though, confirm to a double. I am, for anybody looking at Alcoa, we have some pretty key. Not only do you have the flat 200 here, this is some pretty major support. So I am watching for a bottoming pattern in here. And no, not a massive head and shoulder, because this cannot reverse this move. So I'd have to dive deeper into their earnings report to really look at it. But, I mean, it was a miss, but obviously it was not that bearish as taken with the gap down, the immediate gap fill, and tried to even break to recent highs. Pay options 22. Where do we sit? Oh, I'm not touching some of these comments because it just won't be good for the channel. Oh yeah, I saw in the job. I thought it was 44 days, wasn't it? Walks away with 118K year. See, this is the joke of these pensions, even the pensions we have in this country for Congress and our, I saw that with trust, with in the job for 43 days and pension for life at 118K a year. It's a joke, absolute joke. There, thank you, Jake, for putting the question mark in. For doubles, do you typically calculate your risk reward based on the 75 trade through level that invalidates the pattern, or based on the 62.5? I typically do it from the I actually go with a sort of a hybrid. I found the 75 gets triggered very infrequently. I actually go by a sort of a midpoint hybrid for reward to risk calculations. If you're new at it, I would use the 75. It will give you more conservative. However, you'll have to do more pullback trades. Because even if you close, you rarely close at the 62.5. You close somewhere beyond it. So you have to give it a little room. For beginners, I would use the 75% trade through pattern. And then once you have a bunch of stats from your own, whether you're paper trading or real trading it, then you can work on fine tuning it. I think for this kind of channel, I don't know. I guess Coco doesn't think 6K subs is very good. I think for a pure non pumping channel, that has boring technical analysis, I never thought I'd get to 6K. But I guess must be wrong. I guess 6K is not good enough. Oh well. By the way, this is back to Alcoa. This is a significant level right here. 41.50. I'd keep an eye on this daily 50, but you start getting back above there, it could be an interesting potential bottoming trade. Especially aluminum can be an interesting play coming up. Where else? I'm looking for any questions. Do I know why NKOK earnings? Are you, or did you mean Nokia? Because I don't know of NKOK. I mean, I'm not going to cover OTC stock. Did you mean Nokia? Because I know they... Is that what you meant? Because you have NKOK. Do I know why Nokia is down so much? It's what was their guidance? They beat top and bottom line, but what was their guidance? Everything on this, not everything, but a lot's going to be on guidance. Is one of the reasons Snap got destroyed. Pulling fourth quarter guidance by Snap. I'm not talking about Nokia right now, but that can crush a stock right there. So what was Nokia's guidance? That's going to tell you a lot. And I don't have the guidance here without scanning through stuff. So you'd have to, can somebody let me know what Nokia's guidance was if they released it? So that's the first thing to look at. When things beat, look at and they trade down, look at the guidance. Well, the market rarely goes straight up or down. Wouldn't it make that easier if it went just straight to your targets all the time? Well, that would be easy. Is there a website or documentary that explains option market maker hedging? I'd have to search. I've never done that search before. I don't know of a documentary, definitely. I mean, there's lots of, you could just do a search for market maker delta neutral hedging, and you're going to find information out there. Because remember, as a market maker, you want to get to delta neutral, because market makers don't trade directionally besides very short instances while they're putting in their hedges. You don't leave a lot of delta. You are forced to make a market. So you can't sit there and leave yourself exposed. 4-hour will trump the 30 minutes. Higher time frames are more important than lower time frames. No, it was not a slow motion shake and bake. It would go with major support and resistance, not this little minor channel. I mean, it sucked people in. It was a false breakout, and you had momentum. You could almost go with it on a short-term basis. I prefer the major basis and not just a 1 hour. I guess you could call it a shake and bake. It's roughly that you have the pattern down correctly. So here's your horizontal channel. You're breaking out one side. So anybody who was short going into this is, we're breaking back up, covering, and then, or people getting long and then slamming down through the midpoint of the channel and then closing on the other side. But there wasn't a lot of follow through yet. The stronger patterns are 4 hours and dailies on bigger channels. But you have the pattern down pretty close. How about a checkup on Intel? I was looking at Intel. Which time hasn't had a daily close above the 62.5 on a retracement from the recent high. Which, you're talking about this? A close of, which retracement are you talking about? Or are you talking this? There's no close yet above that one. No, there is no close. That's probably what you mean right there. Remember, my stuff for Intel is very, very long term. It's not because, all right, as I talked about before, cycles at the bottom, you get some key moves like to do cash secured puts. If you sold cash secured puts at the end of last week, you know, especially if you sold unless you get a big down move tomorrow, you're going to collect the cash secured puts. If you had a big down move and depending on your strike price came in the money, then you'd offset it with what you collected minus the strike price, and you'd be long, and then I'd look to sell some calls against it. This is watching to start building a longer term play. This is not something to play in and out of from a little short term, because this is not a strong bottoming pattern. This would be viewed for my thing. That's why I have another line here lower as trading around a core position. Looking to build something with a very decent dividend yield. The dividend yield is 5 points. That's not taking today's close, but over 5.5%. Yes, chips like Intel can still come in some more. They can still have some earnings compression, I think, especially next year. But geez, with that dividend, and if you're smart with building a position, that's the kind of stuff I want to look for long term versus other things that people are looking at that have insanely high. Even though I might like the company, there's no way I want to build a position with both from a fundamental and a technical thing yet. So yes, it is not closed above the 62.5, but I don't really want this to go anywhere. You know, it can go up a little, can go down a little, can even break these lows, whatever. I actually love it to sit in here, and you can harvest price action, and if you're holding some of the shares, you can collect a dividend. But you got to be picky where you build the position. For example, we start breaking below these lows. It's not then trying to grab some at 24 and 23 and 22. You can see my next major area is around 21. That's the difference between trying to do something with building some, and how did I come up with that area? Major breakout zone, retested with support. Because you can literally build a very nice position without this, even on a stock drifting lower with this kind of earnings yield and by harvesting premium from the options market. And then when it eventually does bottom and turn around, then you have what I consider is a solid fundamental, and once you get a long-term technical trigger, a long-term technical play. But that's a different strategy than trying to just trade something. From a trading perspective, there's no weekly buy, and from a trading perspective, there's no daily buy just yet. I mean, there was this. No, there wasn't. Nope. Again, Michael, what stock? You got to put your stocks in your comments, just because I might not loop back to it right away. Comments scroll by, so I don't know which stock. Are you talking about Alcoa? I think you were. I think that's what you said. If I was going to buy, would it be around 33 area to 33.50, which I would start out with 100 shares. First, understand those support areas. You have some major support down at this 31. It depends. Again, are you looking for a short-term buy signal, or are you looking to build a position? Preferably with this, if you were trying to buy lower, I'd be looking, around 33 to 32, right down around this area. You can look at the reverse harmonics here. See where those come in. I'd have to do some more analysis on this because I have not done a fundamental analysis. But this thing could easily, are you talking about building a core position, or are you just looking for a short-term trade? Because they're very different things. This, I wouldn't necessarily be building a core position right now. Yield, no PE ratio, still in a substantial downtrend. Could get a little interesting if you get above that 50 on a closing basis. Other than that, the thing I do like is you're right against this 200 from a trading area. But if that 200 breaks, watch out below. Now let me do, you're asking questions. So this is where I do the whole analysis. Because we are below the 62. So this would be just a trade. Why? Because it's below the 62.5 from the most recent swing. This area breaks, and it should still technically come back down. It's an interesting play in the short term going into the next few weeks, possibly. But you start breaking below, anything I'd build in here or trade in here would be with a relatively tight stop. Let me see. Relatively tight stop with a below about 31.50. Because you get a close below, and that would be on a closing basis, especially a weekly close below there. You can start trading down into this clear path move, and you could see a fair amount of downside price movement. Well, I look at Bitcoin. Yeah, let me get some of these lines off of here first. Right, what do you want? You want the let's see, what do I do? Major support and resistance. The key area you really want to watch for on a daily closing basis. Let me just take a look. Make sure we're accurate here. There's your weekly close. I'd put it about 18.5 on a daily closing basis. 18,475. Daily closing basis 18,475. $18,475. And key resistance, your short-term resistance is right around 20,500. And that's only, you have a couple key resistance areas, but the key area that would get me interested if it can get back above 24.5. Until then, you're in this bigger channel. So your major support is 18,475 area. Your major resistance is 24.5 area. I'd be more worried if you were to break down, especially if we get another sell-off in the market. If the market can put in some stabilizing into fourth quarter, your first minor breakout area would be above 20,500, and that would be a play to about 22.4 for a definite stop raise. And then if the market's very bullish with the NASDAQ, then 24.5 would be the next target up. Do I think the NASDAQ could drop another 50%? I'm not even going to ask Waka Waka. No, it's another 50% from here? Very unlikely. Very unlikely. I mean, if we want my you want one of my worst case scenarios right now, 78.80. I'm more so focused on 9,200. Do I think it could be another 50% down? That would take it, where are we now? 11,000. What do we close at today? We closed at 11. Let's just call it 11,000. So that would be taking it to 5,500. I know Waka would like that. I'm not seeing that. Is anything possible? Yeah, if something really completely goes haywire in our whole financial system. I mean, if we went even before that, I'd be looking at 6,800 to 6,000 in pure disaster mode. I think it's going to get hard pressed to really get below 9,200 in major pullback mode. But I know Waka Waka is lower. Meta. See, this is still on earnings compression. I'm still, until this trades above the weekly rotation zone, not interested at all. It's trading against key support, but if that one breaks, I'm looking at longer term 109, then 96. We already bounced off the 125 harmonic. There's not a great bottoming pattern yet. Remember, bottoms don't generally happen in a V shape unless you get Fed coming in with major rate slashing and making money cheap. They generally take a base to build from a bear market. So I don't have a base. Yes, it's getting relatively cheaper, but I think P to E is going to keep compressing a little more on this. I was watching here to see how it would fare and slice through. I think we'll get some consolidation. But if you break below this key low, right back from December of 18, remember the tantrum, the taper tantrum in 18? This was a key low. And also the double bottom reversal pattern. You break through that. Aggressive from a buy side yet in Meta. Not at all. All right, thank you. Nokia Ericsson warned of margin pressure. So there's their warning. That's why it's trading down. Their guidance was, hey, we're getting compressed margins. So that's going to get reflected in their... Did they give a specific earnings guidance, Sterling? I'm still trying to catch up. I was thinking about starting in a position like Intel with MMM. That's old. MMM. I mean, that could get interesting. MMM. I mean, you already know my thoughts on Intel. I'll be watching down here. Yeah, that could be interesting. This is some pretty decent support in there. P to E's at least coming back in line, and I have to look to see how they're faring in terms of where I think EPS is going. I definitely wait till the next earnings report comes out of the way because, which is next week. But that could be something very interesting to start if you were looking for another core possible trade, and I have not fully researched this one. But we've retraced from the COVID lows. And you got that 62.5 back there in Feb of this year, and it finally got down below here to 87.5. And that's just not the COVID lows. You have the lows from back in 08, or sorry, in 15 and in 14, which validated this key breakout from December 13. So this could get interesting. That could be another interesting play. I'll have to look at that a little more. MMM. Because at least your P to E isn't outrageous. Outrageous. If this were to make a nice weekly double, let's say they come down after earnings, I'd wait. I always like to wait for things to trigger, and it's still against the weekly rotation zone, so you still got time to build a position in it. If you were looking to trade it, it would be with a tight stop, because if this key area breaks, especially 103, ooh, you could see another pretty substantial decline. Remember, if I'm helping out at all, you can also, there are super chats, there are ways to support the channel. Not required, but it's always nice. FAST. Not a long-term bottoming pattern just yet. That would be sloppy. Just looking, I'm looking at the vicinity of this 200. See, the PE could still come in a bit more. I would not be aggressive on FAST. If it did trigger a weekly double, which we don't have set up yet, I could, if it were to trigger that, could be interested because it's in the vicinity of that 200. I'd have to do some more fundamental analysis. Don't know if this is a good area to establish anything with just off a glance at that PE range. Now let's do some other technicals from the COVID lows. You're right at that 50. So as long as you don't get to see, I'd be in here. I'd be really interested. This, even though below, you got a fair amount of support right in this area with the 200. Ooh, I want an alert. All right, so yeah, this would be an interesting area to watch for some key support and a key buying pattern. So I'd be looking closer to, especially this comes down to around this 43 area for a possible some kind of play in there, or even potentially lower. Yeah, it could break this 200, but you got key support just below there. If it's, my line in the sand would be 39.51. So depending on your time frame, this would be an area I'd be looking at. You're still against the weekly rotation zone, and there's no short-term buy pattern. What's this dividend? 2.69. Actually, this could get interesting on a continued pullback. That's why I said alerts for it. But would I run out and do something tomorrow? No. Also, you can see just from technical analysis standpoint, so you had support tested here, close there, definitely tested here with a weekly close right on that level, and then the rapid move away. This closed below that level, and then you got it validated here. So if it does not pull back, would not get really interested unless it got back above 47. But then I'm slamming into the weekly rotation zone. So there's still nothing. This would be on a watch list. Don't think I'd have to be aggressive on this one. Well, sorry you're in the hospital, Michael. Hope you are getting better. Well, the markets will be here when you get better. They're not going anywhere, and they'll probably be in an even better position for longer term plays. So I do hope you feel better, Michael. Netflix on a short term? Well, here we still got the challenge with this is on if you going down in the short term. Well, we got gap harmonics at 255.33, key support area, and then you're running straight into the breakout play with the rising rotation zone. Uh, I mean, yeah, we could have a pullback to gap play from a long term perspective. I'm watching for another rollover play in this. The other play was down here, which is done. I would not be chasing this thing at this point higher. Is there a short play just yet? Not from my perspective yet. $260 is going to be a very interesting area. We slammed into the 200, tested it twice, still inside bar from yesterday. We start getting below yesterday's lows. I will focus on that 260 and 255. Those would be intraday plays. Below that, the challenge with the gap plays I talked about the other day, you're slamming into 250 round number, which was prior resistance validated. And by the way, a gap does validate resistance becoming support. And you're sitting there with a gap harmonic with a rising rotation zone. So any short play would be super aggressive going back into support level. Therefore, from my perspective, would rather watch how it reacts at that and see if there's a short-term follow-through buy play. Because if we get some kind of rally going into the fourth quarter, this could be still a play from a short-term trading perspective, through the end of the year. Other than that, there's no long-term pattern. Now, what's interesting is if we do get that pullback and then a move back up, there's a fantastic target area. I actually want to see where this sits. Look at this. I mean, and this isn't truly a pausing bar yet. It is technically on the daily. It's not on the weekly. But I'm just curious because if this thing can stabilize or even pull back, catch on the rotation zone and rotate back up above the 200, I'm more interested would be in a short-term breakout play then. It's already softened the 200. Remember, generally you run into it, it softens it, then if it's going to go through it. So it's already softened it. You break through there and close above there, we get strong markets going into the final quarter, which we don't have yet. But if we do, and I'm not talking about a play for tomorrow, I'm talking about a play that could be watched once this breaks above and definitely closes above this 280 area, 293 area, 293, 294 stop reduction. Target 307. You could use 300 as another stop reduction, and a key target with the 62.5 and a harmonic 308 area for a short-term play, at least after it's softened. Right now, with daily cycles at the top, I would still be watching for the pullback. And as long as this, even if this comes back here to the daily rotation zone and holds and then rotates back up, there might be another front run play before that 200. Wow, there's a lot of, I'm sorry, I'm running out of energy. I'll have to look at those. We'll have to do those some other time. Michael, please come back. I mean, even we could look at them tomorrow afternoon, possibly. I just want to get through some of these, some more questions. All right, you got the sympathy trade. So they don't have to be one or the other because they're indifferent. I like XOM stuff in the short term, not necessarily long term yet. I mean, I still got to go with the energy plays because the energy sector is still bullish. But for a long term, I like Intel better. Short term, I like XOM better because Intel's not a short term play. LAD levels. Ew. Oh. Yeah, that's an understatement. Looks like it's collapsing. Well, I think you know what I'm going to do, options 22. It's below the 60. Your next key target area. Don't even have a fantastic pausing area. Wow. This thing's getting hammered. Next key target area, because you're into a weekly clear path. Look at this. You actually closed into a weekly clear path a couple weeks ago. Look at this. You got to close below the 200. You slice through there. You're coming into a weekly clear path. The first target for the weekly clear path is 158.30. You are also now closing below, at least at the daily, the 62.5. Would watch for that weekly close. But let's go see here on a daily basis. Remember, you have a gap fill. Would I be looking to buy? I wouldn't buy this with Coco's money. Target 173.21, 158.30, and then 145. Those are the downside targets. Wouldn't trade it with Coco's money. Just messing with you, Coco. And also this 75 area you can see here is right. You still technically have a clear path all the way down here, but this is the breakout zone. Right in that same vicinity as a 75% harmonic. Would these be buy positions? Not without a pattern. I think you'll easily see this 145s. Hey, Jacob, thank you for the super chat. Have a pint on me? That, with inflation, that's about all it covers. Thank you, Jacob. Everybody shout out Jacob. Nokia lifted full year sales guidance. Sees full year margins. Nothing awful, but don't like market uncertainty. Thank you for the see, now I feel bad for picking on Coco. He gave me a super sticker. Thank you, Coco. I like the money mouth face. Thank you, Coco. Everybody thank Coco. Now I feel really bad for... See, I didn't take this trade with your money, Coco. So you're not at risk of losing. You're welcome. So options for LAD, those are put targets you can utilize. Hopefully they're a little longer term. Thanks for shouting out the super chats. What was it? Mobileye. Michael. Mobileye. But for all the people who say Intel's down the toilet, it's going away, Intel's not going away. No way is Intel going away. Their CEO's got some work to do, which is why it's trading where it's trading, but it's not disappearing. That's why it's a core play. It's not a hey, let's just swing trade it. End the stream. I've frozen up 3 times. Oh. All right. Well, thank you. Again, bring some of these more to a future live stream. Thank you, everybody. Since I got the warning from Sterling, the stream is freezing up, and I've gone on over an hour and 10 minutes. I think I will end it here. Thank you, everyone, for tuning in. And I shall talk to everyone tomorrow morning. Have a fantastic evening. Bye.